live. It is Thursday, right? Thursday,
Indeed.
11 a.m. Central. I am here with my Juju brother from another mother,
How's it going?
Yashu from Hit That Bit. How you doing, brother? Thank you for coming.
Doing good. I hope everyone's doing well as well. And yeah, it feels like a Friday almost because the amount of just roller coastering that there's been in the last few weeks. It feels like every week should be short, but yeah, doing okay. Yeah.
Great to hear, man. Yeah, make sure you can hear us okay in the comments. Make sure you can see us okay. You can hear us okay. As always, one of the things that I really love about our community is that the comments section is always full of great discussion and always super respectful. And so I would love us to continue that trend. One of my biggest proud moments of building this community is just the amount of awesome Discord we have in the comments section. And thanks to, obviously because of Yashu's Juju gang always coming in with awesome insights and commentary. So I really appreciate you all. Maybe we'll start, Yash, with your take on Q4 deliveries. I know there's so much to talk about. I had Gary and Alexandra on yesterday. They gave her 2 cents. I would love to hear yours as well. And there's so many different things we can talk about around that topic, and we can take it from there. So I'll give the mic to you. Just take us away for a little while. What are your thoughts?
Yeah, first of all, I'd say if you haven't checked out that stream, I'd encourage everyone to. It was a great hour and a half session that you had with Gary and Alexandra.
Thank you.
I think the biggest question, by now everyone knows that 405 delivered, 440 produced, that chasm grows in absolute number, maybe not percentage, depending on the way you look at it. But the big question is, does that chasm, and I don't want to harp on this too much because I think we're kind of even past this narrative at this point, but does that chasm reflect people that could not have, there we go. Does that chasm reflect just logistics? And it's just a matter of there's not enough ships, trucks that could really be passed towards the end. And, Tesla has a new way of delivering. Or is it indeed that people were like, yeah, you know what, I don't actually want to buy. And by the time that they decided that, Tesla had already produced these cars. Now, Wall Street looked in the way that the stock reacted the next day, judging by that, you can say it was more of the latter. Now, that's like the immediate question. I talked about this on the live stream as soon as the report came out, but I said on this 8K, I did not read, and maybe I missed this. Someone let me know in the comments if I'm wrong. But I didn't read from Tesla IR that that all of the cars in terms of the gap are ordered and just on the way to the customer, the way that we read it in Q3. So that leaves it up to interpretation. Who knows? The IRA, for all intents and purposes, kicked in 2 weeks ago for Tesla because Tesla discounted everything anyways, and kind of the mess that's going on with confusion. But overall, I think the general market sentiment is that demand has stopped. That's, there's no better way to put it. I think the market thinks demand is over, and it's funny because they don't really care about aggregate demand. It seems like they only care about Tesla demand. But it's like if you look at any other car maker, and how their production deliveries have, or I guess their sales have been in the recession, it's going to be ugly for everyone. But Tesla really only seems to be the one growing at any massive scale still. So that's a lot to say that, until we get earnings, it's going to be just like that. It's going to be sideways action if not weak, I think, in terms of the stock, just because there's no way. We're kind of in purgatory of getting more information. Like we can't, Tesla can't release another press release about something or release an 8K. Like we're just going to have to wait for the earnings call. And so that puts us to January 25th. That's about 20 days away. And I guess during that call, we'll get a better idea hopefully we get a better idea as to all of our questions around demand and whether it's a nothing burger or not.
Yeah. So you do think, oh my God, my dogs. So you do think it's going to be a sort of sideways action up through earnings?
Sideways or weak. I saw some technical traders on Twitter say, look, Tesla's due for a bounce here. I think the real test is 100. Obviously, the psychological 100, 100, and I know a lot of people don't even care about technical analysis, but in lieu of any news, I think technicals kind of reign the day in terms of supply and demand day to day and for traders. But I think $100 is the obvious. We're $10 away, 110 sitting on Tesla at the moment. It's the obvious psychological, I think, technical level to look at the moment. It's a huge level. and some would argue it's 93 is another one, but I mean, triple digits to go into double digits would be a psychological difference for, I think, anyone, whether or not split, adjusted, if you want to talk that or not. But I just think that's a huge psychological level to look at.
Do you think there's anything Tesla or Elon could do between now and earnings to try and maybe soften the blow of the recent quarterly report, or do you really think it's just we're just relinquishing the the universe to traders up through that earnings report, and if there's going to be momentum downwards, that's what it is. If somehow we go through it unscathed and we arrive to earnings, say in a sideways to maybe a little slightly up pattern, that this bodes well for a bottom. How do you think about that?
I guess the issue could Elon do anything? No, they're all in a blackout period. You're not going to hear from investor relations really about any clarity. I think everyone's just all hands on deck for this call coming up. And I hate to say it, but this earnings call is going to be a little bit boring. We kind of know what we're going to get. I don't think energy is going to be a huge surprise yet. It might be in quarter 1, I think, moving into the IRA. But I think the biggest metric I'm looking at is margin, is gross margin, really ex ZEV credit, because this gross margin number is going to paint a picture of, okay, that $7,500 credit, how much of the skew of deliveries that happened on the backs of Tesla giving that discount to customers. Because if a large percentage of that did, and all of that delivery came in the last few weeks, you can make the argument, well, that $7,500 really bodes well going into 2023 and beyond with the IRA and the 7.5. But so it's kind of like a double-edged sword. It's like you don't want to see gross margin really substantially come down because you don't want to see a large portion of your deliveries discounted. Because let's be honest, if Tesla did not discount 7,500, we'd be talking sub 400,000 for deliveries, right? But also, I think in the next couple of weeks we might get some revisions from analysts lowering income by 150-ish million, 10,000 gross margin per car, 10,000 per car, 15,000 cars less than expected versus 420. So they're in the rounds, but I think the margin number is super important.
Yeah, I couldn't agree with you more there. Excuse me. I think the thing that's been like I've been trying to think through, and I posed this to the panel yesterday with Alexandra and Gary, is like, or maybe I didn't really hit it as hard as I should. The Elon on the one Twitter space he did, he talked about supply chain. He talked about deflation, that's it's going to take a while for it to work through the supply chain, and that we should see, it takes a while for it because, what happens is Tesla ends up making contracts that are 90, 180 days out sometimes for materials that are on a fixed price from 6 months ago or 3 months ago. And even though they might be, say, I don't know, freaking the cost of aluminum or some sort of material that they're purchasing has come down 30% between now and then, you're still paying the 3 months ago price up until you're able to renegotiate the contract once your period is up. And so I'm assuming that's what he's talking about from that stuff working in. But really, deflation has been happening. I mean, from a lot of the data sets we're seeing in some things, right? Like lithium is not one of them. We know lithium is going up in price, but other materials have been coming down dramatically. And Elon coming out and saying, hey, Fed, you should lower the rate by 25. Instead, they hike it up by 75 and then 50. So these are additional signals that say, hey, there's something happening in the supply chain that's telling Elon that the costs are come down. So in theory, these should be reflected in margin, right? Theoretically, especially as Berlin and Austin ramp up, going from 1,000 a week to 3,000 a week, that fixed cost structure becomes much more efficient because now instead of using, 10,000 workers and a bunch of machinery to crank out 1,000 cars, you're using the same exact labor and machinery to crank out 3,000 cars. So your cost per car comes down. And if the materials used to build that car is coming down, then, the question becomes how much is the offset of cost going down versus prices going down? And if it's the same, theoretically, we should see margins stay about even, but that's going to be the biggest thing I'm going to look for in Q4 is like, okay, I couldn't agree with you more. Margins 100%, because it gives us the signal that says even if Tesla is doing incentives in China, even if they're lowering price in the United States for the last couple of weeks to push demand for to stoke demand because of the IRA EV tax credit, which we can get into that whole mess that it is. there has to be some offsetting force. Not to mention that the full self-driving adoption in Q4 theoretically should be slightly higher because they have opened it up to everybody. And if people think this is a cool piece of software, there might be a few more people that are signing up for the $200 a month subscription. I'm not saying more people will go out and spend 15,000, but it's going to be small. It's going to be small, but it should be a plus. So I'm curious to see how all these things interchange, and that's the biggest verbiage I'm going to be looking for in Q4. What do you think about that?
Yeah, just briefly on the FST point, I think it's mostly nothing burger still. I hate to say it, and I know you have way more
You're so
experience with FST
pessimistic.
no, it just bottom line, the
I'm kidding.
$200 subscription, like I just don't think it's gonna make a large enough dent. But you're right in the sense that once it maybe I'm wrong, but you're right that most of that would flow to the bottom line. At least there's that, right? So I just don't think it's that story has played itself out yet. In terms of margin and commodity prices going down, I agree. But that's the bet for 2023, right? Is because it's almost certain that Tesla will lower prices at some point this year at some portion of the world. Like that much is guaranteed. By the way, hold on to your pants for that, because that's a whole nother FUD storm coming when prices do get lowered. Maybe that's this quarter. Maybe that's nothing. John says I use the term burger a lot for a vegetarian.
Veggie burgers, guys.
Yeah, exactly. But anyways, so the margin story, right? Gigacastings as well, 4680s, which have been on the topic of a lot of people's minds with, okay, is this going to reach scale 4 gigawatt hours only? We're supposed to be at 100. What's wrong here? So there's a lot, but 2023, you're right. The question is how much of the commodity prices going down will offset some of the price decreases that are probably coming. Who's to say? But that's kind of the bet. And that's why we've seen revisions from analysts for EPS this year go down, right? Adam Jonas has EPS 2023, $3.77 or something in terms of his second last.
377?
377. The street, in case you care, average analyst EPS estimate is $5.29. So, and the low end of that, I think, being Adam Jonas at 374. I see it high estimate being almost $8. So there's quite a discrepancy of what people think will happen this year. And that's why I tweeted it to a degree. I said, this is the year of execution, barring, and cross my fingers, barring war or whatever that we dealt with in 2022, the Fed or Omicron in the beginning of the year, or shutdowns in Shanghai, a lot of stuff force majeure wise, right? In 2022 and prior. Cross my fingers and praying for a better life just in general first. But in 2023, if that is behind us in terms of force majeures, Tesla really should have no excuses. You can't really talk about commodity prices this year, skyrocketing, killing any. You can't really talk about logistics, hopefully, this year. So it's the year of execution. Tesla has to prove to the street that their rating, that their multiple rating that they have for this fiscal year, is given their growth too low. But the street is betting that they're not going to grow EPS to even a degree of what they actually project out. Remember, Tesla grows EPS year over year. Almost 100%, 80+%, almost every. Obviously, that's not sustainable forever in perpetuity. But let's say revenue growth 50% long term. If you want a peg of one, even 40% peg of one, you're looking at a 40 multiple for a growth story. But as it stands right now, sub 20 PE, let's say, give or take, the street doesn't believe in that growth story for the next 2 or 3 years going forward.
Yeah. The Adam Jonas, what does he list for his $3? I think we may have reviewed part of this on your stream last Friday. What was his main reason for that $3? What was it? 15 cents, you said?
I think his margin was 377. Let's just round up and say 4 non-GAAP. I'm not sure if it was GAAP. Yeah. It probably was GAAP. But I think the major point in his model was margin going down sub 25% gross margin. So
okay,
I think that's a big reason of it.
So he's expecting some sort of a big drop. Prices come down, costs don't come down nearly as much as the price. And so this is going to be a big force driver for that mechanism of the lower margin. I wonder how much he's taken into account. Do you have the report up by any chance? The Jonas report?
I'll pull it up as we talk.
Yeah, pull it up and then send it to
Yeah, I
producer
will.
wife
Yep.
here in the background. Yeah, perfect. So I'm wondering like how is he thinking about the ramp of Berlin and Austin within that context? Because
Mm.
then the assumption there is like, okay, as Berlin and Austin, which this is an assumption I'm making, and you guys tell me if I'm incorrect in making this assumption. Berlin and Austin should be significantly more efficient building cars than say Fremont, right? Fremont right now is shipping Model 3s and Model Ys or was shipping a lot of Model 3s and Model Ys to Europe and the United States. Then China started taking over some European sales over time in Shanghai, and it's becoming much more localized. And now a large majority of the production for each region should be localized. So now you're having much more efficient factories shipping cars into their localized regions, which number one, from a net impact perspective, is going to create the cost from a production perspective as low as humanly possible, because you're not only leveraging very efficient factories, you're also not shipping stuff. You're not shipping stuff. You're not putting cars on a boat. You're not putting cars on nearly as many modes of transport to get it to the customer. So I wonder how much of that equation is in his sort of model. And if that's the assumption, if the assumption really is that that those costs are going to be offset to a degree, that margins are going to come down, what is it, 3%, 4% from where they were in Q3. So that a 3% margin hit from a total net price perspective is probably lowering the price by like what, 2%, 3%, no, probably 2%, something like that. And so the assumption is perfect. Yeah, could you bring that up? Beautiful, and then zoom in for us.
Yeah, you might need to right click, open image, a new tab, and then zoom in. But yeah, it's
Okay.
But so what you're saying is because the factories are more localized to where they're going to be delivered and less shipped, so you're saying
Right.
that should. But I'm not sure how much of that falls into OpEx versus a gross margin. That's one thing. I'm
All of
not
us
sure.
should be in COGS. So it should be a lowering of COGS, right? Because I think the COGS, it's the COGS line. The material cost should definitely go into COGS. The transportation costs might go into like, actually, I don't know. I wonder if somebody in the comments knows this. The transportation cost, would that flow through COGS or would that flow through SG&A?
I think it might be
Yeah, I
I'm
would
not
love I would
sure.
love to get some insight into that.
Mm.
So anybody in the comments that's smarter than us, please let us know. This is the Adam Jonas report. So this is what the first page here. So it's got a bull case, base case, and then bear case. This is for 2023, right? So if you scroll down a little bit there, producer wife, if you don't mind. So I'm reading the base case. So he has a $250 price target. This is again Adam Jonas. Our price target of $250 is comprised of 6 components. So $139 per share for core Tesla auto business on 7.7 million units in 2030. Okay. 9% WAC. I don't know what that is. You know what that
Weighted average
WAC
cost
is?
of capital.
Thank you.
Just his discount rate.
Okay. 12 times 2030 exit EBITDA multiple. So he's putting a 12 times multiple on 2030 exit EBITDA
Terminal value.
on 7.7 million units. Interesting. Exit
Yeah.
margin, EBITDA margin of 19.3%, which is almost 10 points lower than where we are today. So obviously, I don't think he's really. Well, okay, we can have a debate on this. Tesla Mobility on $9 of discounted cash flow with 425,000 cars at $1.7 per mile by 2030.
That's the robo taxi.
Yep. Tesla has a third-party supplier at $27 a share. So this is probably like drivetrains, batteries, who knows, SaaS potentially. Energy at $33 per share. So not a lot of energy growth from where some, but not a lot. Insurance at $8 a share, and network services at 33. 20 million. I'm blanking on MAUs.
Monetizable active users, I think, of $800 average revenue per user by 2030 on services. So that supercharging, I think, is what he's talking about.
Got it. So his 2050 is on 7.7 million units. Not a lot of energy growth. Okay, but this is sort of his long-term target. Where can I find his EPS for 2023?
The second link I sent you, Cindy, it's just the first, or if you have, oh yeah, you got it. Okay. Yeah. So just on the right-hand side, you'll see fiscal year ending in that little table. And it says fiscal year ending next 2023, estimated $3.77 EPS.
Got it. So fiscal year ending, which is towards the bottom of the table on the right.
Right. Yeah.
Yep, perfect. And then a little bit to the left there. Yeah, 1223 estimates. ESP, so EPS, earnings per share of $3.77, full year 2023,
Hmm.
which would be a decrease. So he thinks earnings
Yeah.
per share is going to go down in
Hmm.
2023 versus 2022,
It would be a
which is
decrease. Yeah. Yeah.
interesting. Okay.
So, so my point being, there's a disconnect, and who's to say who's right? Because these guys put a lot of money and capital, whether we like it or not, into their modeling, their research. Adam Jonas historically has been kind of a wide-ranging analyst when it comes to Tesla, like kind of given all specs of what could happen. But it is like, given what, let's say, Twitter consensus of amongst Tesla bulls admittedly being like, oh, EPS is at least going to grow 30 or 40%. It's hard to say what they're like. They're shaping out next year to be worse than this year for EPS. So obviously we're missing something or they're missing something. It's one of the two. It's hard to see how these are reconcilable, and that's why I'm saying this is the year of execution, because I don't really see very many excuses for Tesla at this point. Like, Tesla has to execute, and by the end of this year, 12 months from now, or 13 months from now, when the full year EPS comes out, we'll know where everything kind of lies with Tesla and what the EPS growth actually was, and what probably will be one of the hardest macro environments, 2023, recession wise speaking, that we've seen in a while. Not stock market wise, hopefully.
Mm. And so my takeaway from that too is, if you can bring it back up again. Perfect, thank you. He's still setting a $250 price target, even with those 2023 earnings estimate, which is over double where we are today. So that's interesting to me. So even though he's expecting, at least the way Adam Jonas is looking at the price, even though he thinks that the earnings per share is going to go down year over year, he's still comfortable setting a price target that's double where we are today because of that. I'm assuming he's thinking about the long-term growth, and he's giving them a much higher multiple than they are now. That 250 is probably close to, so 377 on earnings per share. That's probably close to like a 45 to 50 multiple on earnings, something around there. So that's interesting to see. So we're still
Yeah,
quite above where we
66
are today.
multiple.
66 multiple. Okay.
Yeah. The
What? Go ahead,
Yeah.
please.
But yeah, I was like, it's funny because we talk about analysts and like they look at the current stock price, and it's funny because part of me is like, they don't care what the current stock price is. They model based on what they see fit, discount rates changing, blah blah blah, EPS estimates changing. But then, of course, it's kind of undeniable that as the stock goes further and further away from their target, to make it a little bit more reasonable, they'll chase it down. And vice versa. When the stock was mooning through people's targets for the last year or year and a half ago, let's say, then estimates were going up and up and up to kind of chase that, it feels like, right? So, yeah, 250 is from 330 to 250. It's a really big discount, but of course, given 110 on Tesla at the moment, it's still, if you look, you know, based on how you look at the research, I mean, it's still quite the upside. And I'd bet you if Tesla did recover to 250, then we'd magically get a bunch of upgrades as well on the street.
That's what's most interesting to me, is that it seems like a lot of these upgrades are based on where the price is now. It's not really. It's like, because when I think about Adam's sort of long-term 2030 target, it doesn't seem like it's changed much. He's always been kind of on the 7 to 8 million range, and he's sort of been adding different variables onto the like, you got the energy, you got the full self-driving stuff.
Hmm.
But he doesn't have that much built in 2030. That's what's fascinating to me, is that
Hmm.
energy, full self-driving, software as a service, energy, insurance, all this other stuff. It's still a small relative percentage to the entire business versus the full 250. About more than half of that price comes from auto. And so the assumption is that
Yeah.
auto is still going to dominate well into the 2030s, and the rest of the business is not going to really catch up.
Well, I mean, we have to look at it from their perspective. It's not real yet. For them to start modeling energy at the levels in 2030 that maybe us bulls might think. It's just not real. Like for them to stick their neck out and say, this is how many billions of dollars of free cash flow energy by itself will print when it really hasn't shown that to us yet, like in terms of execution.
Mm.
It's just not their, it's not the name of the game for them. That's just not what they do. And so, you can call that delta, you can call that alpha for us. Let's say if we're right, or alpha for them if they're right, let's say, or now that maybe the shorting opportunity is over. But you wanted to talk about mega packs, right? This fiscal year, and it seems like 10,000 mega packs is kind of the goal for Tesla 2023. $1 million, let's say, ASP on those, average selling price, maybe
It's more than
more.
that.
Yeah, so let's say 10 billion ish, and 60 people are saying 50 or 60% gross margin on those. I know that's pulled from code off this top Tesla site, but let's just say 50%. I know that might even sound absurd, right? Even saying 50%, but let's say it is. $4 or $5 billion of free cash flow on the bottom line for Tesla, just based on energy this fiscal year, where no one's really projecting anything out. Again, it's a big question mark, and you don't really expect these analysts to come out the wazoo and start projecting that in when Tesla really hasn't shown that that's what. First of all, they haven't guided for that, so you can't really say that they have, but also they haven't proven it yet. But this is why I think 2023 is shaping up to be such an execution year, because if Tesla can really execute on the energy side, $4 or $5 billion there, I think they probably do 12, 13, 14 billion dollars of free cash flow on the car side as well. At 2025 altogether, the bull estimate, let's say, some might say more, and then it depends on, okay, well, what kind of multiple do you want to give to that for a company that also has 20 billion in cash sitting on hand? So
Yeah.
these are the questions, but it all comes down to execution this year.
Yeah, I couldn't agree more. I think that's a brilliant way of putting it. It's like now that everything is lining up exactly to where Tesla's strengths should start to kick in, which is in a market where theoretically, if there is going to be any price pressure, theoretically there's going to be multiple markets you're selling into. The sort of the efficiency of the building, or the efficiency of the manufacturing, the securing of the supply chain, the technology on the building of vehicles, the technology around making your own cell, the gigacasting, the single piece, the single piece casting in the structural battery pack, the Alien Dreadnought, the Model 3 refresh, all these things should really, and Cybertruck and energy, right? All these things should start to coalesce around, especially if you compare it to the rest of the industry. It should become a very bright, shining light that says, look at what all of our investments in time, energy, and knowledge, what the result is. And then it becomes up, and it comes, it's on the market to decide how they want to price that capability of not just being theoretically very far and ahead of the competition, but also being able to be a giant cash cow, selling those products and entering those markets with those products. I couldn't agree with you more there. I think execution is 2023, especially with Elon and Twitter, and how one of my feelings is that Tesla has the most talented workforce in the world. You're right. Like, okay, time to show it. It's your
And
year, baby.
and what was one thing in common with every one of those things that you mentioned? Highlander, Cybertruck, energy, all the things that's in common with those, that Tesla has to prove itself on those. We might believe in the engineering team for sure, and I think we do, but Tesla has to go out, execute, prove themselves that, like, look, this Cybertruck that we all know is probably coming middle of this year, fall of this year, whatever it might be. I've kind of set my expectations, by the way, around July 4th, Canada Day, that kind of area. I mean, maybe I'm too bullish on that, but I've
That'd
been
be
waiting
sick.
for right. Like, but
Could you
anyways,
imagine?
Tesla has to execute, right, on these things for these to actually start being reflected by the street. And remember, the street really owns mega caps. Like, whether we agree with it or not, the street really dictates where Tesla stock price will go, at least in the short term. So, and I see Dan correcting me in the comments saying mega pack 2.6 million, or 2 million if bought in groups of 10.
Yeah.
I guess I misphrased. I'm talking about just the margin aspect of what comes from the mega pack. So fair enough.
I mean, and like literally, but that makes a billion point. If it's 50% margins, that's a million. That's at least a million per mega pack, which is like bananas. That's a bananas number.
Hmm.
And so Sandy Monroe, the Monroe team's doing a live stream on Friday from CES, and they've sort of asked to field questions from some people. And my question to Sandy and the team was, could you give us some guidance on how you guys are thinking about how much money Tesla could make on energy? Like you guys, obviously are specialized on costing out cars and stuff, but if you really think about what it takes to build a stationary battery pack, you don't have any moving parts really. You just have pumps, to try with the coolant to ensure the battery doesn't explode. But outside of that, what else do you have? You have batteries and you have a protective casing and some auxiliary stuff in the middle.
Hmm.
So it seems like to me that the cost and the steps and the processes required to build a stationary battery pack are limited. And so it becomes a question of, okay, what is the cost benefit analysis of this energy in relation to how much money a utility can save and how much a customer could benefit from the utility using this product. And from at least from what I know, and you've correct me if I'm wrong, and everybody else correct me if I'm wrong. I'm going to use the United States as an example. The United States is a first world country. It's the richest country on earth. And the electric grid is kind of garbage. It's kind of a hot mess. You drive around, there's, especially in the Northeast, when I used to live in Pennsylvania, all you have to do is look around and you have these like freaking just, I don't know, it just everything looks old. Everything looks really old. It's been there for decades, if not 100 years in some areas. I would not call it a modern grid for deploying electricity or even generating electricity. There's still, a lot of places are using peaker plants, and they're using coal in a lot of the areas, and especially in Texas. I don't have to tell you about freaking what is it? What did we call it during that? I forget. COVID something snowvid. That was the name,
okay,
Snowvid, because it was the huge freeze during COVID. We called it Snowvid. The grid went down for freaking 4 days, and it was because they weren't able to deal with the peaks and stuff. So, long way of saying that there's a lot of opportunity. There's a lot of opportunity, not just in the United States, but in a lot of countries around the world, to improve the grid and to do a lot of things to really get those things up to speed. And now that Tesla essentially has the ability to produce the most number of battery cells in the world on their own, theoretically, this gives them an economy of scale for this product that is far beyond what anybody else could do. So the question becomes, compare the cost benefit analysis of this battery and put it next to a grid that is super old and has a ton of opportunity. If Tesla can offer something that allows utilities to, say, lower their costs by 10 to 15%, but they can do so in a product that is significantly cheaper than building out a peaker plant, that gap is profit. That gap is margin. And that's why I think, and then you layer on the fact that it's not that hard to, compared to a car, to build a freaking stationary battery pack. Why wouldn't it have 50% margins? Why wouldn't it have 60% margins? Am I thinking about this incorrectly? I would love to hear your thoughts on this a little bit, Yash, if you haven't.
Yeah, I mean, that's the best part of utilities, is that at the end of the day, it's just dollars and cents. Brand loyalty is not really a thing when all you care about is getting electricity at the cheapest price possible. So you're right. And that's why I think the mega packs really speak for themselves. And once they are pumping those out, it's going to sell like hotcakes should they be up to spec. And we talk about the mega packs and the IRA as well, right? They also give credits based on kilowatt hours there, I believe. I think it's like $30 per kilowatt hour or whatever produced. So it is substantive in terms of the government rebates off of that as well. The mega packs are great, but it's funny because I don't even like project for energy in my model because I just don't understand the unit economics of it as well as I'd like to. And I'm really looking forward to when Tesla, let's say, does start having unit economic profit off of their energy side of the business and diving deeper into how many units of the mega packs, or there's just so many different aspects, maybe solar, maybe roofs, like there's just so many different aspects of the energy business that I still have yet to understand. And someone says in the comments, Matt Smith is the best. He absolutely is. I did a whole session with him on the channel. That's his background. So it's exciting, right? But amidst everything that's happening, it seems like the focus is not on that as much as it is on insert Twitter story or geopolitical story or Fed. And it does seem like that is front and foremost of everything that's happening around any stock, but especially Tesla.
Yeah. Shout out to Matt Smith for sure, because he is a great resource. I should have him on next week. I should bring him on. I'm gonna check with him if he's available, because he did work in the energy sector, so he's super familiar with this. Maybe we can pick his brain on this. Along the same topic of energy, I wanna do a quick thought exercise here. So, producer wife, if you can bring up the link I just posted in the private chat for me real quick. So this is Tesla's earnings. Go down to page 23 if you could, please. 23. Perfect. So this is Tesla's statement of operations. This is for up through Q3 2022. For those that are not familiar in reading this, this is basically Tesla's every quarter as a public company, they have to publish this form that basically describes this is how much we sold in these places. This is how much it cost us to sell these places, and then at the bottom is how much money we're making from these places. So the net income attributable, I can't talk. Net income to common stockholders. That bottom number is basically how much money the company has made. But there are two lines there that I want us to pay attention to. So under revenues, there is energy generation and storage, which is 1, 2, 3, 4, about 5, 6 lines down. Energy generation and storage. If we go all the way over to Q3, that is $1.117 billion of sales from that part of the business. And then if we go to the section right below where it says cost of revenues, that's how much it would cost them to sell those units. So if we go to energy generation and storage, it's 1.013. So they sold 1.117 in energy, and it cost them 1.013 to sell 1.117. And so the margin, basically how much money they're making on that, is the top line minus the bottom line divided by the top line. So it's basically they've made about $100, 100 million, excuse me, not $100, 100 million on 1.117, which is roughly 9% margin. So in Q3, Tesla has made 9% margin on energy products. And so the only reason why I bring this up is for folks that are sort of into the energy discussion and trying to understand, hey, I keep hearing guys talk about Megapack, and this is going to be a giant part of the business. This is where you want to look to when Tesla starts releasing their quarterly reports moving forward. So come January 25th, which, by the way, Yashu is going to be on our mega stream with Nick Gibbs and others as well that will join us. Look for news on that. Look for that line, and then take the top number, minus it by the bottom number, and then take the difference and divide it into the top number, and that tells you the margin on how much they're making. And so theoretically, if we're correct, or let's just say I'm correct, because I don't want to put words in Yashu's mouth, but let's say I'm correct, and there's the assumption that it's going to be very, very cheap to build out the energy storage in relation to how much you're going to be able to charge for it, then the gap between the top number and the bottom number should be very, very big. They should be able to sell it for a lot more than it cost them. And so that's what I'm going to be looking at that line like a hawk in 2023. Honestly, that's going to be my most interest. I'm the most interested in that subset because Elon and the team have been talking about energy forever. They've been saying it's going to be probably just as big, if not bigger, than the car business over time. And with the Lathrop facility coming online in California and all these rumors around how many megapacks they're building and how much money they're making, that line better get big. It better get big, which really the fascinating part about this is that if you talk to any bears or if you talk to anybody who follows Tesla kind of loosely, and they're sort of like, well, it should be valued the same as Ford and GM. Which, by the way, we can have a discussion around. And I can very quickly say you're crazy for saying that because look at their debt load. Look at Tesla's debt load. Literally, that's insane. But whatever. And plus, they don't have really any electric vehicles. But we can talk about that another day. That energy business becomes a new variable that gets introduced to the valuation of Tesla. That I don't think. When is the last time a company has been able to have these giant industries from a manufacturing perspective that are so diverse but are centered around the same exact technology? How's that? What is that going to do to valuations? How are people going to value it? It might be the first time in history that there's a company like this one that does both these giant industries rooted from the same supply chain. I don't know.
Well, I think that's what Tesla's always commanded, and historically speaking, at least, a premium on their multiple because of their TAM possibility with energy. But to answer your question, I think one company I think of right off the bat is Amazon. Amazon was in the book business and the online retailer, but if you really do a deep dive on their financials, and admittedly I haven't in the last couple quarters, a large percentage of their bottom line, their net income is AWS related, cloud services related. If it's really not for AWS, Amazon does not make as much money on the bottom line as they do. And if you look at AWS as a percentage of revenue, it's not consequential enough to really account for. And AWS might be more analogous to Dojo one day as a service, or FSD maybe as well. But you're right, for the energy side of the business, like the sky's really the limit, because if the unit economics on the energy side makes sense, it really doesn't matter what brand it is. People are gonna buy the thing that saves them money on their utilities. But again, like I said, this is like the fifth time I've said it already. Execution is key this year. Tesla has to prove it, and it can't be a theoretical thing anymore, based on, oh, Tesla has this pumping up or has this ramping. Of course, as investors, that's our alpha that we're I guess betting on, is like this is going to happen. But for the street, at least, they're like, let's see it.
Yeah. Page 10, if you could, producer wife. This is Amazon's latest Q3 earnings report. So Yash is talking about one of the analogies between Tesla Energy and Tesla with its energy business, and then Amazon with its AWS business. For those that are not familiar, AWS is basically Amazon Web Services. The reason why you're even able to watch this thing right now is because this stream is probably running on an AWS server somewhere. And so seriously, who would have thought a store that sells books would eventually make money from providing server services to streamers? So if you can zoom in a little bit there, so it's a little bit easier for us to see that. Perfect. Yeah. So and then scroll up a little bit so I can see the headers there. Perfect. So 3 months ended September 30th. So 2021 is last year's basically Q3, and 2022 is going to be this year's Q3. If we look at the net sales from North America, which is the first line, you can see that in 2022, which is the second column, Amazon has done $78,843 in 1 quarter of sales in North America. But it cost them, it cost them $79 billion. So they actually lost $412 million selling their stuff through their Amazon business. Like when you go on and you do same day delivery, they actually lost $400 million, which within the scope of $78 billion sold, it ain't that much. It's like less than 1%. So they have like a negative 0.5% margin. And then the next section below is international. So how much they sold outside of the US. And then the last line, this is where it gets super interesting, is AWS. This is the Amazon Web Services. As a total business, Amazon, if you add up the North America and international, if you add up the North American net sales and international net sales, you can see that 78 billion plus 27 billion roughly is about $100 billion of revenue just from their warehouse business, like selling to you with Amazon Prime. And then $20 billion in the same quarter came from their Amazon Web Services. But what's the huge difference here? The first two sections, Amazon has lost 412 million plus 2.5 billion internationally, which is actually, that's a pretty significant number. So they've lost close to $3 billion selling you stuff on Prime. And then on the bottom, 20% of their sales, that 20 million roughly, they actually made $5.4 billion from that business. So 20% of their business is it's basically making infinitely more money than their Prime business. How crazy is that?
then the retail.
right?
Yeah, it's nuts.
Yeah.
And people are saying this stream's running on Google's cloud network. I think Farzad's talking
Okay.
about StreamYard at least, because StreamYard is what we're using when
It's
we're
just an
talking.
example. Yeah.
But yeah,
Yeah.
but you're right. So look at their operating income. It's actually even greater than the point I was trying to make. All of it. If it's not for AWS and their money that they make there, we're talking really, and that's kind of been the knock on Amazon for a while. It's like, oh, they don't make any money, but they're growing. Like, what's the question here? And people are like, look at their EBITDA instead of looking at their net income. People don't like to give this credit, but like the story of Amazon and Tesla have more commonalities than people like to give it credit for on the come up, at least. I know you hate Bezos, so you probably want to deny that.
Oh, I hate him so much. I'm kidding. I actually, the dude's yoked, bro.
But I've also for this Amazon example, unless there's anything you wanted to add here, I wanted to look at Amazon's historical PE, because I think that's maybe a good indicator of maybe what's to come. Because I'm looking at Amazon's historical PE here on macro trends, and Cindy, I've sent the link here in the chat. No rush. But really, the PE is, and of course, you have to take this with a grain of salt, because Amazon really, for a while, didn't make any net income for their EPS. It was EBITDA related, because of after everything, they were technically losing money, right? But if you look at their PE on the bottom there, and I go back, and of course we can talk about the last 5 or 6 years, and their PE being 100 or 75 or 70, 60 is kind of the lower end of the PE that Amazon has garnered. But I'm really like looking towards the 2010s and the 2011s and 2012s post recession, trying to see like, okay, what sort of PE was Amazon getting back then? And really, yeah, I think the lowest I could find is a 45 PE in 2010, middle of 2010.
This is trailing 12?
This is, yes. Yeah. So it'll be Amazon's PE for the last 12 months EPS versus the average price in that quarter, I think, is the way that they calculate it.
Got it.
So that bottom graph there that you'll see if you hover over maybe the third dot over 2012, 30, right there, 45 PE, I think is the lowest I could find for Amazon. So, and that's one side of the story. And if you compare this to Apple, though, I found, and if you just throw an Apple into that little search bar where it says search for ticker, Apple during the same period had, well, I guess maybe I've already spilled the beans too, but can you guess how low their PE was around then?
Under 20.
Under 10. Under 10.
Oh shit, you're right.
Look at couple. Yeah, there we go. 8.6 exactly. So two different stories, both growth stories in a degree, and maybe this warrants a deeper dive on my end. And someone in the comments, I'm sure, would know more about this and the multiple that each were commanding back then. But it's interesting to see the dichotomy, and admittedly, I guess one aspect of this could be explained by just basic. I mean, Amazon really with their EPS wasn't like, EPS was not the main metric that bulls were evaluating Amazon for a while, because they would just expense everything. So it's really mostly their EBITDA, I guess. But Apple, it's interesting to see under a 10 PE, isn't it?
That's fascinating. Actually, what's more interesting is the more they've grown and the bigger they've gotten and the more their growth has slowed, the higher their PE has gotten. How do you explain that?
Well, money printers to a degree. I mean, when the Fed started printing more money, you'll see 2020 and after is really when the multiple went into high gear. Just more money in the market, more money supply. Maybe that's a portion of it, but it's just Amazon versus Apple is just a crazy. And someone says buybacks, maybe, but it is crazy to just look at the difference between the two, and I think it's a really interesting debate.
Yeah. So can you hover over the last one there, producer wife, all the way to the right for Apple? So this is as of oh my God, that's the European style. That's April 1st, ain't it? Or is that January 4th? Can you go back one dot to the left? Oh no. Wait, what?
September 30th. Yeah. So it's 3 months ended on the quarter is the way that they just label it.
Oh, 2023. I keep thinking we're in 2020. Damn it. I'm still not used to the new year.
Yeah.
Okay, got it. Oh geez. So if you go to the last dot again for me. So as of this, like literally yesterday, they're at a PE of 20. Apple is. Okay.
Yes.
Fascinating. Yeah. So which one? So when you think about Tesla's like future prospects into the 20s, Do you think it's going to follow something closer to Apple? Or do you think it's going to follow something closer to Amazon? Because like I'm wondering if during the 2010s, some of the equation was also like, yeah, the PE was below 20, but that's because they were just they were having such giant earnings that the price was not catching up to how many earnings they had, right? Because during that time period, I mean, Apple was you're talking about a cash cow. I mean, my God, that was like Steve Jobs' decade, really towards the beginning, especially. So how do you think about where Tesla could land between those two examples we just went through?
Tesla's kind of in the middle of those two. Like I continue to look at like 2010-ish because that's kind of what I'm looking at post recession is like, okay, and mind you, this was the 08, 09, like the biggest like recessionary period, biggest crash in my history at least, right? And the last really big one, and that was more of a systemic recession problem with subprimes and all this stuff. So maybe that's not even what we're talking about here with the recession coming up, and maybe it's a big fat nothing burger. But I
Veggie
look
burger.
at it, Impossible Burger, and Apple and Amazon, Tesla's kind of in between when it comes to multiples right now. But the reason why I say Amazon and Tesla have a lot of commonalities is because Amazon bulls, to my recollection, and if someone was an Amazon bull in 2015 or whatever around then, feel free to let us know. We're kind of singing the same praises of well, you're not looking at Amazon's profitability. That's not what matters here. Look at their revenue growth. Look at the AWS. Look at this business. Like this is what matters in long haul. And I think this is Tesla's that Cindy pulled up here. So
Right.
Tesla, yeah. So now we're sitting at forward PE is a little bit different, but yeah, 20 something, right? So
33, I think, the trailing.
So there we go.
Yeah.
So I don't know, to answer your question, where to look at this, and I guess it's for the market to decide. It's for the street to decide where it lies. But I'm not sure. I'm curious to get your thoughts.
Yeah, this is where like 2022 has been a very big learning year for me, is that it doesn't matter how I feel about what the correct price earnings is for the stock and how much I could justify it. The market's going to do whatever the market decides it's going to do. And in a bear market, it's going to be way lower than a bull thinks it should be. That was my biggest takeaway. So, and obviously macro is having a lot to do with that as well. So, honestly, I don't know. It's tough for me to like figure out, how the market's going to price this beast, because it's all hinging on how it goes back to your point, the execution. If Tesla can grow earnings faster than the market expects it to, then theoretically the trailing PE should go up. That's how I think about it. As long as the market feels that Tesla's long-term prospects are secure and its ability to generate cash is secure, and their ability to come out with a bunch of different products that are going to continue to generate cash for it is secure, that its competition is not going to eat away its demand, all these different things, the market has to believe that. And so for me, I'm kind of on the same boat. I think it's probably going to be somewhere in between the Apple story and the Amazon story, only because again, I'm hinging on this fact that Tesla's ability, I believe, in the future to generate profits and to generate cash is going to be the surprise of 2023. I really think so. Even with Elon coming out on the space and saying, well, in a world where there's a severe recession like 2009, we're going to, forego any profits on the auto business and then go for units versus margin, which to me just said, hey, we're just in such a good financial position that we can sell stuff at a loss and we'll be fine. That was my takeaway. It wasn't necessarily that, hey, this is what we're going to do. And so the question becomes, how is the market going to price that when the business could theoretically continue to grow 30%, 40%, who knows, maybe even 50%, like they've been talking about year after year, especially with the introduction of a robotaxi and with the introduction of the Cybertruck and with the ramping of energy and with the adoption of full self-driving. And these are ifs, right? These are ifs, but I just don't see how those things don't get done. Like, can you imagine what's going to happen once Tesla announces that compact car, which I want to get your thoughts on the March 1st thing that was announced here, the Investor Day. Can you imagine what the reservations are going to be for this car once it gets announced, this compact car, which we all know is being worked on and which we all know is going to be part of their strategy to get to 20 million cars per year? It's going to be crazy. If Cybertruck has 1.5 million reservations worldwide, what is this compact car going to do? It's going to have millions. It's going to have millions. So perhaps that's going to be the big sort of moment where this starts to shift, is once that robo taxi and the compact car gets announced, and they're like, and I'm hopefully it's on Investor Day, because they directly talked about that Gen 3 platform when they announced the date of this event. Maybe that's the signal that says, holy crap, this thing did 1 million reservations in the last 24 hours, or it did 2 million reservations in the last 24 hours. Okay, so you take that with within the context of for example, the Model 3, it had 100 and I think what is it, like 500,000 reservations within the first 24 hours or something, if I remember correctly. That turned out to be Model 3 is doing roughly 500,000 cars per year. So that reservation number should be a one-to-one relationship to how many units it should do every year. I mean, that's a loose sort of very loose non-scientific analysis, but that's how I think about Cybertruck. Cybertruck theoretically, if the Model 3 example reservation is correct, could have up to 1.5 million units sold per year. Don't take it from me. Like I'm not gospel here. I might be speaking out of my ass, which I often do, and I'm sorry for that, but I'm just trying my best to figure out what's going on. But if that's the right correlation, then Robotaxi and the compact car are going to do some crazy numbers. They're going to do some ridiculous numbers.
So first, a lot of good points. First, to tie the bow here on the Amazon thing, I see a comment from Robert Hansen saying Tesla is a cyclical auto company with falling earnings in a recession, more dilutions as insiders sell. Technically not true, but I get your point. Elon slashing prices to main production. Regression to the mean means another 50% down, question mark. So the Amazon story ties into this, because the 08-09 crash, you saw Amazon stock still go up. And the reason for that, I think, because if you look at, like, what's the worst thing that could have happened from the recession back then, is consumer demand going down, right? People not wanting to buy stuff, incomes, jobs lost, incomes down. People are not going to want to buy things on Amazon, or so you think. But Amazon still grew during that period. And though it was a recessionary period, Amazon still grew because at the end of the day, there was cost savings, I think, to be had on Amazon for consumers to buy their goods on Amazon versus going to XYZ store, corner store, buying it there. And so I think Tesla has potentially an analogous story here, in the sense where if we're heading into a recession, the cost of car ownership is already high, maintenance is high, cost of labor is high to fix your gas cars. Gas is already an additional cost that you have to pay, albeit it's not as high as it was 6 or 12 months ago for gas prices. But there's real cost savings to be had with going electric. I'm just going to leave Tesla out of it and just say electric. So what we're going to see, I think, is the electric market really benefit this recession, because there's going to be cost savings, or at least there's going to be higher residual values for people's cars versus buying a gas car. Because if you buy a gas car 2 or 3 years later, 30%, 40% depreciation. Maybe you could get sold on the idea of, if you buy an electric, albeit whatever brand it is, it only depreciates 10 or 20% in the same time period. So there's that. So basically the bottom line is, I think Tesla could still grow in a recession, and outstandingly so, relatively speaking. And then to your point about the compact, how much does that matter when it gets announced? I'll be honest, when it gets announced, I'll be excited, but I want to see actual timelines met with products before I get too excited too fast. I was excited about the Cybertruck, man. And here we are still waiting for the Cybertruck, albeit in the grand scheme of life, it's not a big deal and force majeure happened. But I think what's more exciting is to actually know a timeline will be met for the next product line that they announce. And I think Tesla is being very careful with not announcing this compact that supposedly is out there until they release or until they deliver the first few batches of Cybertrucks, I think. I don't think Tesla wants a scenario where they're forced to talk about another car hitting pre-orders when they haven't delivered on their Cybertruck yet. And Roadster, someone's going to say Roadster in the comments. Forget about Roadster for now, folks. It's not going to happen. It's a dessert level vehicle. Elon's kind of even said it himself, right? It's like at the end of the line kind of priority. So will I be excited? For sure. Will I hold my breath for it? No. But I hope Tesla proves everyone, including me, wrong. Where when they announce it, it's not a long time for production lines actually hitting on those. And I think it'll be a China specific vehicle first. I think Shanghai, Giga Shanghai probably will lead the charge on that compact first and foremost. I don't think it'll be a North American story just yet, because if you look at China, I think there's a need for that Chinese type of car. I was listening to Matt and Emmett's Good Soil interview with a former Tesla Giga Shanghai worker, manager, and he was saying how the Chinese consumers like to buy newer model stuff. It's not about, it's like the Model 3 and Y, like everyone's like, oh yeah, I kind of had it, the Plaid maybe, but it's like they want to buy like the new model, right? It's just for the sake of buying it. And I think Tesla and Tom Zhu, I posted a video. I watched the Tom Zhu interview last night in Chinese subtitles. Don't worry, I don't speak Mandarin. And he was saying how he wants there to be a Tesla or a China specific model that people can look at. When you look at this car, you're like, oh, that's Japanese. Oh, that's a muscle car. That's American. He wants a Chinese version, a Chinese model where Chinese people can be proud of this model is like unique to their country, right? And so there's a lot going on there, but I reckon we probably hear something soon. Yeah, there it is. Thanks for pulling it up. So you don't have to pull up audio on that. Trust me, no one's gonna understand it unless you speak.
You underestimate my multi-language. No, I'm just kidding.
Well, actually, Matt Smith actually speaks fluent Chinese. Did you know that?
Yeah, I did. It's wild.
It's crazy.
And he taught me how to pronounce Tom's proper last name. It's Jew or Jew, something like
Tom
that.
Jew.
Yeah.
Yeah.
Get it right, Josh.
And so,
sorry, go ahead.
but that's it. I mean, it's to answer your question. And so for me, forget about me. What will the street think? I think the street will really get excited with the compact, because all of a sudden now they can plug and play in stuff in their models where it's like, okay, well, 30,000, 35,000. Okay. And we can see market penetration here, quite advanced market penetration, that is, into the segment, because right now they look at $50,000-$60,000 cars and they go, are we really going to talk about 10 million cars, 20 million cars at these price points? I don't think so. Where does that stop? So yeah, it's going to be exciting. And even, by the way, a semi or a Tesla Sprinter van, which has been kind of rumored as well from Giga Mexico.
Yeah. A lot of really great points. I on the robotaxi topic or the compact car, I think launching it in China first makes so much sense. And I agree with you 100%. Because you think about the other market, China and Europe. I think China and Europe, that compact car is going to just do so freaking well. Especially you think about Europe and, the roads are just tight. There's not a lot of room. Most European countries, especially Western European countries, compact cars do extremely well. So your, Volkswagen Golfs and your Renault Zoes and your Peugeot 206s and all those, whatever they got going on right now. So that compact car is going to do extremely well. And I don't see it coming to America probably for at least a couple of years. But what are the chances this compact car, like if your sort of hope is correct, and during this investor day on March 1st, which producer wife, if you can bring up the link for that again, it's on Discord. It's one of the first ones that we showed yesterday about Tesla announcing the investor day on March 1st. The verbiage specifically on there says Gen 3 platform, which the way I read is compact car, robotaxi. Come learn more about that. So in theory, there should be some sort of announcement that says, hey, this is what we've been working on under wraps for the last couple of weeks or a couple of years. And, God, this would be incredible if they're like, and we're going to show this. We're going to start launching this in China in first quarter of 2024 or in fourth quarter of 2023. That's probably a very aggressive timeline, but that sort of verbiage I think is going to be very helpful, especially with the Cybertruck launching in the US this year. Cybertruck and Model Y, I really think in the US it's just going to sell so much into the market that Tesla, I think if Tesla decided to bring the robotaxi to the States as well, they could seriously have an issue with production. They really won't be able to do that. And I think maybe Tesla has been scarred from having those crazy lead times and wait times, especially as we see it now with all the different things that they're doing around trying to reduce wait times for customers. Robotaxi in the US, when you have Model Y and Cybertruck on the wings, is like it doesn't make, especially with the IRA EV tax credit. And if it gets fixed and the 5 Seat Model Y actually is able to take advantage of the credit, forget it.
Mhm.
Real quick for the folks that are listening, this is the Tesla announces date for 2023 Investor Day. We plan to host Tesla's 2023 Investor Day on March 1st, 2023. The event will be live streamed from our Gigafactory, Texas, with the option for some of our institutional and retail investors to attend in person. Details to follow. Our investors will be able to see our most advanced production line, as well as discuss long-term expansion plans, Generation 3 platform, capital allocation, and other subjects with our leadership team. So most advanced production line is going to be whatever they're doing right now with Model Y. Shout out 1,000 live viewers, by the way. Thank you very much for joining us. We just hit 1,000. As well as discuss long-term expansion plans, gigafactories, maybe master plan part 3, Generation 3 platform. I don't know how that's not robotaxi compact car, and capital allocation, which sounds like buybacks, maybe dividend, and other subjects with our leadership team, which could be, I don't know, whatever, Twitter, who knows. Yeah. So, I mean, this to me sounds like compact car, man. I don't know. Am I reading incorrectly into this?
Do you think they really would announce something like that on an investor day? I just am skeptical that they would give the pleasure of announcing something like that on a random investors day. To me, this investors day, though I applaud them doing it, and I think it makes a lot of sense given the turmoil that it's kind of been. It just feels like a reactive event for now for me. And that's
Mm.
fine. I not everything has to be proactive and whatever. It just feels like this is kind of like them trying to save face a little bit with what's gone on in the last little bit and the mess that it's been. And that's okay because not everyone can get everything perfect. And I think they're trying to make things right by being more communicative. But it just feels like one of those. For the Generation 3 platform, I think they'll talk about the structural 4680 battery pack and gear castings, but I don't think they'll go as far to say, and yeah, it's going to be, compact that looks like this, that is going to be released in China, that'll have this price point, and this is our timeline on it. I think it'll be a loose, like, Altium, like, how GM talks about like their Altium, their kind of Altium platform, and it'll be on all these cars like this. I think it'll be more about the tech side of it and the margins, but I don't think they'll go. Pardon me. I don't think they'll go as far to say this is the compact released in China. This is what we're thinking it's going to look like, and this is the timeline on it. At least maybe I'm wrong, but that's just my thoughts.
Yeah, I could see where you're coming from, but then why include a Generation 3 platform verbiage? Like why not just say our investors will be able to see our most advanced production line, as well as discuss long-term expansion plans, potential product lines, and capital allocation and other subjects. Like, why call out Generation 3 platform so like strictly? That's kind of where my head goes to. And I don't know. I mean, I can see where you're coming from because it is an investor day. It's not like we're launching, but at the same time, I wonder what you think about this. What if Tesla is just going out of their way to ensure that they're not hyping up this cheaper model too much because it could cannibalize 3 and Y sales in like places like China, and everybody's just
Yeah.
waiting. What do you
Well,
think about that?
yeah, that's what Moon says is really an Osborne effect, and I think that's correct. I think, uh, look, I would love for Tesla to adopt the Apple model, and I know it's probably not reasonable to assume that this is even possible for a car company versus a phone company, but the Apple model is they announce their new product lines, and within a month or two, they're ready to get shipped out to the customers. Like it's like Apple doesn't announce something that's going to be 2 years away. Like that's just not the way they work. When they announce something, they capitalize on that hype and they go, "We're ready to ship these guys in the next couple of months." Now, of course, these are cars we're talking about with huge manufacturing lines. Like it's probably not reasonable to say like, oh, a phone built in a factory and a car with these huge lines can have the same product unveiling strategy. But I think the Generation 3 platform still sounds vague enough to me. Like, I don't know why you're thinking it has to be specific on a product. It sounds vague enough for me to say, oh, eventually the 3, the Y, and the future compact will all use this type of platform that we have that's 4680 driven, structural driven, and I just think they can talk in general, kind of talking more generalities that way. If they said, oh, but future product lines, then people would jump the gun, I think, on that more than if they just said Gen 3 platform.
Mm,
I don't know.
I could see that too. I'm just really excited for it. I'm really excited for that day. I think the comment you made about it being reactive is 100% correct. I couldn't agree more. The one point Alexandra made on yesterday's stream is that there's two fascinating things happening this year. One is this Investor Day, which is the last time they did anything like this was back in 2019 to try and I guess cater to the investing base and put them at ease a little bit and be like, hey, check it, just calm down a little bit. We got this. And they moved up their yearly annual shareholder meeting to May, which is um, 9 months from the previous date. So it's less than a year, which is another interesting thing. So I think they are listening to the feedback of, hey, the communication is crazy right now. We don't know what's going on, and help us out a little bit, which I think is really cool for the company to react to that. If that's the case, if not, then whatever. But it's good that they're doing this because I think it really does help the invested community stay focused on the long term. It shouldn't be up to the community to hold itself accountable for that. The company needs to be, it's a public company, and it should do some work to ensure that the community that's become a little divided stays on the prize. That's the company's job, not the community's job. Even though a lot of us try to do that anyway, because we're trying our best to see through the noise. But if the company ain't helping, how are we supposed to freaking hold ourselves accountable to it? Poll results. We ran this poll earlier in the stream. What will be Tesla's earnings per share in 2023? So the one that got the most responses, 43% of poll respondents, 353 votes, they think it'll be somewhere between $5 and $8, which is significantly higher than Adam Jonas's $3 and some odd cents, 373 or something. But of course, we're all Tesla bulls, so I'm not surprised about that. 32% think between 3 and 5, which is right around that range. 12% think over $8, which so not a lot of like crazy optimism, which is cool to see. And then 10% think less than $3, which 10% of folks are not as encouraged by the 2023 outcomes, and I'm guessing because of the potential recession demands, recession issues, and demand problems potentially that we could have in 2023. Thank you very much, Producer Wife, for bringing this poll up. What do you want to hit before we hit Q&A? Is there something on your mind you want to hit before we start answering some crowd questions?
No, not really. I think we can hit up questions.
Okay, awesome. So yeah, let's start doing some Q&A. We'll do like a little extended Q&A here because Yashu is such a good sport. Can I have you for like 20, 30 more minutes? Is that okay with you?
Absolutely. Sure.
Okay, awesome. Perfect. So we'll do an extended Q&A for the Juju gang. So drop your questions in the section below, in the comment section below. Make sure you type question before your question so it's easy for us to pick out. And then Producer Wife will pick out only the best ones. Only the best ones. And we'll put some chill music in the background. While she works on that, I do wonder. So, just to recap, Q4 earnings. The biggest thing you're looking for is margins. It's from the discussion that we're talking through. Really, margins is number one. What are 2 and 3 for you?
Margin, energy, and ASP. Because if ASP is still pretty high, and the general mix is okay, then I think Tesla still has room to lower by a couple of thousand. And because if I guess it's kind of ASP and margin kind of go together, but I guess margin, and then energy, and then maybe the third one just being bottom line. What is the bottom line number?
Okay. Yeah, if I were going to rank mine, it would be, I would say for me is energy number 1, margin number 2, and then I think full self-driving number 3, to be honest. Like in this whole thing with the bear market and sort of where the stock price has been, and Elon being Elon and saying feature complete by 2022. Nope. Wrong again. So again, but I would rather him be optimistic about this than pessimistic. Like I'm not gonna like ding him for missing timelines. Like you gotta shoot for the stars. If you miss, you land on the moon. There's that very like corny cliche, but it's true. So I much rather him be that type of CEO. But I do wonder. I think we need to start hearing more about FSD, especially now that it's sort of anybody who purchases the thing in the US can use it. I've personally seen a lot of so much improvement to the point where, my wife is like, I can see why they made this full release. Not perfect, but it's getting pretty freaking close. And there's a lot of regions where it's useful. So in this whole noise sort of, or, signal time we've been in, that's been kind of tough to navigate. Full self-driving has sort of been forgotten about its potential, especially in the near term. So could we get some guidance that says, yep, literally in Q2, we expect our margins to raise by this much because we expect full self-driving to be in everybody's hands, and we think adoption is going to go up by 10 to 20% because we're going to do a free trial for everybody. And then we expect everybody who uses it, 10% of those people will sign up with a monthly trial. And then as it gets better and better, we expect this number to grow to 50% in a year and 80% in 3 years. I don't know, like something like that. I doubt we'll get that. Yeah, thank you.
Yeah.
But listen, I gotta be optimistic.
Tesla will never guide like that. Elon might, but I don't think Tesla.
That's the bummer. That's the bummer. Because I've been thinking about guidance too. Is like that 50% guidance they've been giving is phenomenal on years that they can beat it, because they can be like, we told you 50, but we went 80 in your face. But then on the opposite years where it's like, they say on average 50%, when we're below 50%, they're like, well, we told you it's going to be, some years higher, some years lower, but that doesn't sit as well. That's why I get guiding is so important, because when you beat, the market loves you for it. But when you miss, you get punished by everybody, right? Mm-hmm. And it's for near term, medium term sort of folks that are looking to trade the stock or be part of the stock, it sucks. But for long-term investors, it doesn't matter, right? If you're 5-10 years from now, it doesn't matter. So anyway, all right, let's start doing some Q&A here. Producer wife, when you get a chance, let's do the first question and let's get started. All right, first question. Would the Gen 3 be the new Model 3 with front and rear castings? What do you think, Josh?
I don't think so. I think it'd be substantially different, not just adding in Giga castings and calling it a new model, I think.
Yeah, I agree. I think, because Model Y is not called the Gen 3 platform, and Gen 3, Model Y is literally that. So I agree. I think it's going to be the compact car. But great question. Thank you. Let's do the next one. George Orwell, question. If the street determines where Tesla will go, why does Tesla not put more effort in building trust with the street? Phenomenal question. What do you think, Yashu?
Look, I've always been on team Tesla should have a communications, PR-ish department, even if it's a couple of people. So you're talking to the right, I think you're talking to the wrong guy when you ask this question, because I agree with you, George. But I think, and maybe Farzad, you're on more of my side now on this, maybe. But I think a lot of people will tell you it doesn't matter what you tell the street, they're still going to run with their narrative, blah, blah, blah. So I think Tesla should. That's my answer.
I think the investor day this year is like a small step towards that direction, where, retail investors are kind of loosely tied to the street. They are people that buy and sell the stock, and they influence what the price is. It's not like Wall Street, and it's not, the media outlets, but at least it's saying, hey, we hear you in a way, so check out what we're working on. And it being live stream, and the community and like these channels and Twitter and everything, they're going to disseminate the information out to everybody, and we should eventually get to the street. So even though they're not catering directly to the street, I think it's passively that step. But I think this is like ultimately, I think this is a question of how does Elon view the kind of culture he wants to build from the standpoint of catering to a subset of the media that historically he's been very unhappy with. And so from a like personal, I don't know, maybe like his moral compass, I don't think is going to allow him to do this too much. And I think the investor day is going to be as close as we get, unfortunately, or fortunately, depending on where you are on this side of the coin. So that's how I think about it. I think it's just Elon. It's Elon, and it's his company. And yeah, he's a public company, but ultimately he's going to set the tone. And I don't see him doing that. That would be a big U-turn. So we'll see. Great question, George. Thank you. Next one. Question. Thoughts on Elon's poll? Oh yeah, let's bring this up. Let me send you the link. Oh, look at producer wife is just on fire.
Nice. Got it ready.
Elon Musk should stay out of politics, keep shooting his feet, and my wife freaking voted for keep shooting. Way to out yourself there. I love it. No, she's very she actually likes Elon, being his own man, which I respect. What do you think, Yashu? I actually voted.
Well,
for
it's funny because someone pulled a tweet from Elon from 2017 where he said, I'm paraphrasing, he said, one should not get into politics. There's no winning on either side. For paraphrasing there, I forget what it was, but So it's funny to see how kind of things have changed. But so one side of the argument would be, look, Elon is some sort of the moderator of this platform. As a moderator, you want to be unbiased and you don't want to skew results being the moderator, or you don't want to drive narrative as the moderator. And then the other side of the coin is, look, Elon is a free thinking human being with free will. He'll do what he wants. It's Elon. So I think he should stay out of politics personally, but that's not to say I'm going to force him to do that, or I think that he should for himself. But that's just me.
Yeah, actually, to correct, I was corrected in the private chat. My wife did not click on that. That is the result. The result is
that's the result, because there's no check mark. So
yeah. So my apologies. I didn't want to like throw Cindy under the bus here, producer wife. I am on the same boat as you are. I do think that staying out of politics is wise, but here's the deal. Like, I am encouraged by how much lower the noise has been around Elon and Twitter for the last couple of weeks, when he's not outwardly trying to like saying divisive things, or, you know, which he has every right to do. But notice how it's been a lot quieter. It's been a lot quieter. I'm not saying this is right or wrong. This is just something I've noticed. It's been a lot quieter around this front. And so theoretically, would it be, is best noise no noise, using one of his analogies? And could he continue to do politics, but do it behind the scenes? You know, just do your thing. And if sometimes you want to tweet about it, great. If you want to use verbiage that's maybe a little bit less divisive, great. But it's up to him. You know, I'm just a different person than he is. And that's why I don't run Tesla. And that's why he runs Tesla. You know, I would never be able to come up with Tesla. So who am I to tell him what to do? But that's how I think about it.
It's also not the way, it's not also what you say, it's the way you say it that matters. And I think Elon's he's been purposely to make a point, a kind of a bull in a china shop to a degree, with the way that he said stuff, not what he said specifically, but maybe that's to a point and he's trying to make a point, and I guess who's to know?
Yeah, and then Lex's reply underneath: you are at your best when you focus on engineering over politics. And then somebody replied to him: you are best when you focus on your podcast over telling people how to run their lives. Vicious. Twitter. Welcome to Twitter. All right. Yes. Thank you, producer wife. Let's do the next question. Jesus. Man. From Moon, question: what will be the time between announcement and production of the compact? That's the question. What do you think, Yashu?
Year or less, I'm hoping. I know, quite optimistic, right? But I think Tesla will probably want to start delivering within a year, because presumably this compact's going to cost a fraction of what like the Model 3 or Y costs for it to be a compact. And so therefore you'd hope there's a faster way that they can produce these things. So I'm saying a year or less is my guess, but maybe that's optimistic.
I'm with you. I think it's going to be much shorter lead time than the Cybertruck for sure. It's 3 years plus. Here's my hot take, and my hot takes have been 100% wrong this last year, but I'm going to do them anyway because I'm not afraid.
Okay.
I think the compact car will be the first time in Tesla's history where a new product line gets leaked before they announce it, because they're going to try to build it ahead of time, right? They're not going to be able to avoid, because when they announced the Model Y, the Model 3, the Cybertruck, the Model S, the Model X, the Roadster, the Semi, nobody knew what they were going to show. They just did a teaser and then it appeared, because they have an extremely close-knit tie of people working on the prototype. You don't need to build out a production line. You don't need to build out the machinery. You don't have to put in the processes. You don't have to bring on suppliers, right? So if this strategy is what they take with the compact car, which is start getting the production going, and, you know, say 6 to 12 months, you'll crank out the first unit, a la Apple with the new iPhones. What would have happened is you've already green lighted a bunch of suppliers and a bunch of equipment manufacturers and whoever else that's required to start ramping up production. And now you are relying on tens of thousands of people to keep their mouths shut. Good luck with that, right? And that's how leaks happen. So if that were to happen, I think we'll see the compact car from Tesla before Tesla announces it. And that will be the signal that says that it's closer than we think.
Okay.
And I can't wait to be wrong on that. Like I have been with everything else. Next question. Okay. Why are people not talking about not talking about Twitter as an advertising platform for Tesla? What do you think, Yash? This is your wheelhouse.
Because it doesn't really make sense. Tesla doesn't need to advertise on Twitter as their first advertising mechanism. And let's be honest, the optics of Tesla giving money to Twitter when Elon owns Twitter would really just optically, I think we could agree, would look like kind of a handout to Twitter based on what's happening. So I just don't think it's. I think Twitter. But if you don't mean paid advertising and just like Tesla Twitter account tweeting, and for example that crash that happened, that all of the passengers were saved and the father ran over a cliff, and he's going to be prosecuted for that. Yeah, 100% organic. But if you talk about paid advertising, I just don't think it makes sense yet to talk about that in terms of Tesla, that being Tesla's first mode of advertising, I think.
Yeah, I'm with you there. I'm 100%. Yeah, I don't have anything else to add there. Somebody in the comments tell me I talk too much. Sorry.
That's your job, man.
That's my job. I don't know what to tell you. That's how I get my brain out. So if you want shorter answers, maybe start your own channel. Next question. What do you think the 2022 cash flow will be? So, I mean, I think, what, 4 billion, 5 billion, something like that?
2022? No, I think 2022 probably close around 10-ish.
Yeah.
10-ish. Okay. Yeah, I think 400,000 vehicles, which probably means about 3.5 billion in free cash flow. Just this is offhand. 3.5, and I think trailing 9 months prior to a quarter three inclusive is probably close to 6.1 or 6 billion for cash flow. So maybe 10-ish.
Okay.
And then 50 next year, hopefully.
Yeah, I'm right there with you. So the next one. Is it a miss if production is sold but in transit? I mean, it's interesting because the miss equation, it's like depending who you ask, you get like two different answers, right? There was somebody from ARC doing an interview on a finance channel he was like, is it really a miss if the company is growing 40% when the rest of the industry is down, 2-3%, 5%? I think miss is just, it's such a weird word because it really comes down to what are you comparing it to? In the world of finance, is like you're comparing it to what the street is expecting. And so if that's how near-term stock price movements are dictated, it seems like, then if you don't deliver what the street thinks you're going to deliver, it's a miss, regardless of where it is. Now, theoretically, but here's what sucks is in Q1, now the street's going to be like, well, those were in transit anyway. They were sold. So we're going to up our estimates by that much. So I could see how that's unfair. But yeah, it's a weird question. How do you think about this one, Yashu?
When you've done something one way for a long time with the street, and then you change the way that you deliver all of a sudden after, and of course, Tesla gave a lot of context. They showed that little delivery wave graph and they tried talking about it. But now when you release it, expectations are one way, and then now reality is sitting another. So the only thing Tesla could do to make this clear is they say, we produced 440. We've actually sold 440 as well, by the way, but we were only able to deliver 405 because ships and truck, and they explicitly said that. Will they ever do that? Probably not, because they don't think they owe us any explanation for that on a quarter by quarter basis. And they're like, screw you, this is what the facts are. But short of them saying, we've actually sold 439,000 out of the 440, and they're just on the way to where they need to go. But for short of them saying that, we're going to assume that they're not sold, or the street's going to assume, I think, that they're not sold. So,
yeah. Next one. And EC again. Awesome. Was China's sales slowdown in December a result of COVID impacts, pricing problems? This is the big question that's being debated ever since they posted deliveries. I think it would be. I think COVID definitely is having an impact for sure. For sure. You go two years with your country being in giant lockdown, and then all of a sudden you're like, open the floodgates, and then half your country is probably sick by now. This is going to impact sales. So I think that's definitely some sort of magnitude that's being impacted. The pricing stuff, it could be, but again, I don't really think pricing is that big of a problem. Like, there's two different equations. There is the pricing equation, and then there's the margin equation. I don't think Tesla has a problem with pricing or demand. They might have a problem with how much margin the street expects them to make in that specific market if they're not able to generate enough demand at those higher price levels. And so for me, it's, if it's a price problem, just lower it, and then you'll stoke the demand you need. It's going to hit your margins, but you could make it up on the backside with lowering costs and better production. How do you think about that, Yashu?
I think COVID definitely played a part into the last little bit in China, but the caveat to that is it hasn't played a part, I think, to the same degree for example, NIO or BYD did at the end. So if you're a bear, you could say, look, what's up with Tesla specifically here that's made the difference? So I guess we'll see. I haven't dove into the data for other auto manufacturers as much as I think I should if I want to properly answer this question.
Yeah. If anybody has any insights on this in the comments, let us know, because this is like, we'll know in Q1. I'm curious if we'll get some guidance on this in Q1. We'll take it from there. Let's do a few more. Extended Q&A. EV. Question. When do you think, EV Geezer, that's actually a great name. When do you think we'll see Tesla get back to its November 2021 all-time high of around $412 per share? Boy, if I knew this answer,
that's the thing.
I would probably...
I would just...
Yeah, I would be on an island somewhere hanging out.
Yeah.
Man. So I've been playing with this idea a little bit. That was going to be one of my video ideas for next week at some point. It was like, okay, let's do a thought exercise and think about if the market assumes like a 20 to 25 price earnings multiple for the stock, and you assume some sort of earnings increase with the cars trending towards 20 million per year, full self-driving, energy, all these different variables, how long it would take. I mean, based on my model, and again, I'm bullish, so take it with a grain of salt, 2025, 2026, something like that. What do you think? I mean, and again, not investment advice. I don't know what I'm talking about. This is just a thought exercise. But how do you think about that question, Yashu?
I think let's crowdsource. Everyone throw in the comments when you think.
Oh, yeah.
The one thing I'll say on this, because I can't give you a precise state on anything, but the one thing I say is look at the Fed, because the Fed dictates the next wave, in my opinion, of equities. Because, like I said, how long have I been saying this? I've been saying if Tesla came out with the robotaxi network tomorrow, it seems like with the Fed, nothing would matter. And it seems like we're waiting on the Fed to pause, pivot, whatever you want to call it. So I'm quite actually bearish on the economy, because I think the last Fed hike was already too much. I think the one before that was questionably too much, and the one coming up is way overboard, in my opinion. So I all of a sudden now look at, for example, the news that came out of Bank of Japan and the kind of gong show that's going on with their systemic problem with bonds and their upper thresholds going up. And I'm like, is this indicative of a macro problem that the Fed is going to face this year? And if it is, that takes us, I think, throughout this entire year to really get right. And if you look at macro, if you look at equities indexes, they usually don't bottom out until a couple months after the Fed pivots and starts lowering rates again. A couple months after. The time that what's different about this time is that the market has already crashed into that first. Like, we've already crashed substantially going into what will eventually be a pivot. Like, there will be an eventual pivot. So is this different because of that? Is it different because of that? Let's say if it's not different, then macro pivot happens, let's say end of this year. If you're really long, if people are saying it's going to happen this quarter, I don't know. But let's say it happens end of the year, because you're really bearish on this Fed committee, which is set on this destruction path. Then bottoming out may not happen till end of the year. Like, that's kind of where we're sitting at. And the big question again, like I've said, is housing. Where does that go as well? So a lot of moving parts here, but the answer, I guess I'll answer with a package is if when the Fed moves on from their path of destruction. And so whenever that is, we'll see.
Come on, J Powell. Get your stuff straight, bro. Next one. J Powell, Jerome Powell, for those on the Fed chair. Sorry. I should probably give some context. Oh, here's a question from Producer Wife. What does Producer Wife think about being called Producer Wife? Producer Wife, what do you think about, I don't know, Should we answer that question? Does producer wife want to come on and answer?
Yeah, she should.
That's an interesting question. Yeah, it's been funny because the last couple of streams, I love how she brought this up too. Yeah, for the last couple of streams, I've been getting some interesting feedback about folks taking issue with me calling her producer wife, and from the feedback I've received from producer wife is that it's completely fine. And it's no issue at all because it's a little pet name that's super fun. And we love each other very much. And I hope y'all don't think I'm some sort of freaking misogynist, like controlling husband or something. But anyway, yeah, I love my wife very much. And she's my producer and my wife. I don't know. What else should I call her? Next question. Great question, Cindy Moon. That's funny. Jose, what do you think of Tom Ju being brought in to fix sales and delivery? Yeah, I mean, go ahead, Yashu. I'll let you answer first, actually. Go
ahead. Actually, no, you take this one.
I think it's a great sign that the leader of Shanghai, which is Tesla's crown jewel of production efficiency and sales delivery and speed and quality, is going to head not just the American market, but literally the global market. So then all those wins you're going to take from Shanghai should theoretically flow to the entire global production line. I think it's great. I think this is a really good call. It harkens me back to like Jerome Guillen when he used to be like head of operations for Tesla before he moved on to the next stage of his life, and he was at Tesla for a long time. This is the continuation of that, but now you have somebody who, from every interview I've seen with him and everything else, he seems super dedicated to his work, and he clearly has an amazing track record. And you mentioned, Yashu, you mentioned Matt and Emmett's interview with a former China, like Shanghai Tesla employee. I implore everybody to go watch that interview. It's on Good Soil's channel. Go watch it. I think it will give you a lot of insight into the kind of person Tom is. What do you think, Yash?
Oh, that's great. Yeah, nothing to add.
Okay. Let's do a couple more. JW, what do you think about demand? Tesla did not enter many markets in Europe, such as Bulgaria, Turkey, where price is not important to sell because there's no car market. Also India. Go ahead. We talked about this briefly earlier in the stream, but maybe give us your thoughts here.
Lots of countries Tesla can still enter. Thailand is still expanding, for example. So when you talk about demand, it's about how can Tesla get cars there. India, but the import tax is massive. Like it's 100% plus, I think, or whatever it is for an import tax to get any luxury car in there. So I'm not sure if India is a good market. But Apple's going into India. But yeah, India needs to fix its tariff situation to protect domestic car production. But what I think about demand, lots of markets still to enter.
Yeah, you took the words right out of my mouth. Let's do the next one, and then one more after that, and we'll call it. Question: will the IRA guidelines be amended to include Model Y 5 Boy, let's take this time. Let's take this time to promote this a little bit. Producer wife, which I assure you she's okay with. For those that are worried.
Someone called you Andrew Tate in the comments. Did you see?
I know. So guess what? You know that person that I know him very well, Gene Winkler. I know him really, really well. So he's just trolling me. Love you, Gene, you bastard. It's just that everybody's trolling me now. Go ahead and pull up my profile if you don't mind, producer wife, on Twitter, and we'll go ahead and show this tweet that I've put together. So if you're not aware, if you scroll down a little bit to the pinned tweet. So right now the IRA is has an EV tax incentive where the Jeep Wrangler hybrid version that gets 21 miles per gallon, or 20 miles per gallon equivalent, and 21 miles of range is currently capable of getting a $7,500 EV tax credit, but the 5-seater Model Y isn't, and that's because the way the IRS has interpreted an SUV disqualifies the 5-seater Model Y, which gets 330 miles of range and 117 miles per gallon equivalent, is not supposed to get the EV tax credit. So what we're trying to do here as a community is we're trying to tell the IRS that they did something wrong and they need to fix it. So if you scroll down a little bit on that tweet, there is instructions on how to fix this. So if you scroll up a little bit, babe, perfect. That help fix this. So I'll have producer wife send a link to the top tweet so y'all can follow the instructions. There, the IRS is open for comment right now, where you can send an email to pra.comments@irs.gov, and if you put OMB control number 1545-2137 on the subject line, you can write directly to IRS and tell them how you feel about the Model Y 5-seater not getting the discount, and you can also tell them that maybe you're upset about a gas car that gets 20 miles per gallon gets the EV tax credit, which to me makes no sense. So do that. And then in addition to that, if you scroll down a little bit, producer wife, there is a petition you can sign as well if you want to click on that link that we put together. And on that link, we've already this is awesome, over almost 41,000 people have signed this petition already. And so the thought process here is if you want to include this petition to the letter you write to the government, hopefully the IRS will see that, hey, a lot of people are upset about this and we need to fix it. So consider doing that. I'll have producer wife put a link to the tweet so that y'all can do it. And then over the weekend, I'm also working on a video right now to try and create even more awareness for this thing that's really going to highlight just how the U.S. taxpayer is getting screwed by this really badly. So I'm trying my absolute best to create awareness on this, especially for U.S. citizens and U.S. taxpayers, because I really think this is super unfair. But if you're asking me if I think it's going to be amended, I really do believe it's going to be amended because this is such an insane discrepancy. If it doesn't get amended, then that opens a host of different questions that I hope we don't get into. But if we do, you're about to see Warpath Farzad come out, and it's not going to be pretty. So apologies in advance. But what do you think, Yashu?
Is there anything to add to that? That's great. No, yeah,
I don't know.
100%.
Yeah,
I feel weird talking about U.S. law stuff. Like, it's like I'm not a U.S. taxpayer. Like, what am I supposed to say about this? So yeah, but I do agree. It's quite sad.
Yeah. Well, you're a Canadian brother. It's okay. You can have some opinions. Just some, not all, just some, okay? Let's do one more. Last one. From Paul. Do you expect any meaningful work done by Tesla bot by 2024? Ooh. I'll throw my 2 cents and I'll give you the last answer here, Yash. I'm focusing a lot on energy and full self-driving and the auto business, and the bot is not even part of my brain right now. So I'm going to say that Tesla's going to be really focused on executing, like Yashu has said, and Tesla bot is going to become sort of a distant memory until 2025. And so that's my way of tempering expectations, which might still sound bullish, but I'm going to say Tesla bot, I'm going to delete it from my brain until 2025. How are you thinking about it, Yash?
That's kind of what I've done with FSD for the time being as well, because it seems like whenever there's timelines coming up, it's just it's like instead of me having expectations, I'll just put it off and hope it comes. Do I expect any meaningful work? I mean, I guess you could define meaningful work already. What's happened in the last year for Tesla bot and what they've shown from AI Day 1 and AI Day 2, and the delta there. So I think meaningful work will be done, and there's no doubt that there's a large team at Tesla working on this. I mean, remember, Elon said, like, this is Tesla's main focus almost, past what they got going on. Like, this is in the long term. Like, this is going to be... So I don't expect, because the stock price has gone down, or Elon's joined Twitter here, that anything's really going to change too much, in my opinion. So do I expect any meaningful work done? Probably. But will it be commercially ready? Probably not. And yes, I'm probably not banking on it either.
Okay. Yeah, I think that's another thing too, is like, just because the stock price is down and there's a lot of noise doesn't mean that Tesla's going to stop working on all these long-term things. So that's another encouraging long-term development. So, okay. All right, let's wrap it up there. Thank you all so much. Thank you, Yash. Thank you, producer wife. Great job, producer wife. You're the best. I love you so much. Yash, any last words for our group?
No, hope everyone does well, or is doing well. Hope everyone can detach from all the craziness at some point throughout the day or throughout the weeks here, because there will always be craziness in the macro markets. And that's one thing I've realized, is the news cycle has just gotten so divisive, so loud, so roller coastery. There's no such thing as positive news anymore, really, it seems like. And so remember to just disconnect. And one thing I've done, I'll share a little tip. I've downloaded this app, no affiliation. It's called OneSec. And every time I want to open Twitter, it makes me go through some sort of a thing that I've set up. Either I have to breathe in and out, either I have to track my finger to, like, it basically makes it so, like, it makes me not want to just
You have to like
impulsively
prepare.
open Twitter. I do, and then I have to click on select my intention. Then I have to say, what's my intention on Twitter, and then I can set like 5-minute reminders to get off of Twitter. So stuff like that, if you have to do, and I found that helpful for me in this cycle of craziness. But I hope everyone can find what works for them.
That's awesome, man. That's actually a brilliant advice. Talking about producer wife, she's encouraged me to stop waking up and look at my phone immediately the second I wake up, which is something I was doing a lot these last, because I'm like, I got to keep up with what's going on, because I got to be able to, inform my audience and stay up with what the hell's going on. I am a Tesla investor after all, so I got to keep. And she's like, why don't you just take an hour in the morning to just like not do that, and like take care of yourself, take care of your brain, take care of your body. Like just hang out for a little bit. Like that makes a lot of sense. And then the first day I tried it, I'm like, I'm going crazy, but I feel like I'm falling behind. By the third, fourth day is a little bit easier. So it works. It puts me in a better mood. I'm a little bit fresher. I can think more clearly. So I highly encourage everybody to do something to take care of yourself first. I think that's my biggest lesson here. Take care of yourself first, and then embark on your journey for the day. And I think it will allow you to go even harder than you thought you could, because now you're actually well-intentioned, And I think that app idea is actually brilliant.
Yeah, the app is really like a game changer. It's called OneSec. Remember, I really recommend people at least try it out. Again, no affiliation. I love it that much. Also, go for a walk or something. Go for exercise. I think one thing that I've changed in the last couple of weeks, especially, is like really prioritizing physical health, and I find it does help my mental state of mind as well a lot more. Sometimes it's easy to put it off during Christmas time, and that's kind of been my problem for the last month or so, especially because it's dark. It was snowy out, but it's easy. But and again, none of this has to do with Tesla, but I just think it's important, because at the end of the day, our mental state of mind really runs everything. So get out, go for a walk, go to the gym, do whatever you need.
Perfect. Thank you, man. Thank you, Yashu. Thank you, everybody in the comments. Thank you, everybody. Thank you, producer wife. Great job, as always. Thank you so much for the support. And we'll see you guys around. Take it easy, everybody. See you on the next one. Bye.
Peace.